let you know that we will hold this meeting. And before we put it on our YouTube channel, I'll be checking it with the speakers that they're happy for the whole thing to be published, but we could also share it with people who registered and weren't able to come. Tonight, we're going to be dealing with a topic which we believe hasn't actually been addressed before, namely personal divestment. We'll look at how you can make sure that the pension pot or investments over which you have control are not used to support Israel's illegal occupation of Palestine. I should stress that we're not going to deal with general workplace pension schemes. If you are in one of those, find out what the investment policy is and seek to influence it through your trade union representatives or pension fund trustees. We're first going to hear from Stephanie Lord, whose personal divestment journey gave rise to this seminar. And we'll then hear about Barclay Lane's own experience. We'll then hear from a financial advisor, Shams Kabir, who's worked with Stephanie. We'll then have time for questions. We'd suggest that you put any questions you have that occur to you during the presentation in the chat function. We'll also put useful links in there. We expect to finish certainly before 9 o'clock, but we won't go on beyond 8:45 if we don't need to. So over to you, Stephanie.
Thanks, Belinda. Hi, everyone. I'll just quickly share my screen here. Is that coming through? Great. So this is an overview, I'd call this a layman's overview of what I collected through this journey and through the advice and input I received in trying to do this personal divestment journey. This is not coming from someone with a financial background. That's not my background. In fact, I'm quite bad at those things. So I'm coming at this definitely from someone who didn't know a lot about this topic before, and I hope that that's helpful for others who are in similar shoes as I was. So this is not advice in this document, it's empowerment, it's freely given. Asking questions is really welcome. And this journey isn't simple, but it is doable, especially if I can do it. And it can be boring, but remember the cause and the impact. So here is personal divestment as activism for Palestinian human rights, exposing the shadows. And I'm going to talk directly from the report rather than from a presentation that mimics the report. So hopefully that's not too annoying, and you should all have a link in the chat to this report. And if it doesn't work, please do mention it to the organizers. So firstly, this builds on the shoulders of others. So this isn't coming out of nowhere. Brief history here in the report of Boycott, divestment. And so, you will all know a lot about that, but perhaps it'll have a few nuggets of interesting information. And then, most crucially, the anti-apartheid movement, the global campaign against apartheid South Africa, and then after that, the BDS movement, which is an active movement that drew from the anti-apartheid movement, and it has three core aims: ending Israel's occupation of the Palestinian territories, ensuring the full equality of Palestinian citizens of Israel, and recognizing the right of return for Palestinian refugees. So I am not representing the BDS movement here, so I've just put a link to their website, as this builds on the work that the really important work that they are doing and have done. So here is my summary of the growing case for personal divestment. So according to the BDS movement, the D in BDS is shorthand for institutional pressure. So this is what Belinda was alluding to, trying to influence institutions to divest their funds from complicit corporations. The rationale of that is that part of the rationale is that investors are bound by ethical, legal, and fiduciary obligations that they're failing to meet due to the grave human rights violations. So while those legal obligations hold a lot of weight and should hold weight, individuals do have a freer ability to use their ethical discretion. And since investments, especially personal pensions, are the biggest pot of money most of us will ever have, personal divestment is a powerful tool for change. And so this report just has a brief, very uncomprehensive history of certain things that have evolved over time to make this really relevant now, more than ever. So an increasing number of individuals with investment portfolios, personal pensions, direct shares in a company, and an improved infrastructure for ethical investing. But I will go through a little bit of that too. A brief history of corporate responsibility. So there was a shift that in how businesses approached corporate responsibility over time. And in the 50s, it started with corporate social responsibility. And now what you may see is the term ESG, environmental, social, governance. There's often an ESG rating on funds, or companies themselves have ESG ratings. And so this is often used as a shorthand for ethicality. But here, we're just overviewing how that can be misleading. So ESG ratings and corporate irresponsibility. So since they're often cited as shorthand for companies' ethical credentials, they can fail to it can be misleading as someone who just wants to quickly check things. So like me, I thought, oh, good ESG ratings, that's nice, isn't it? However, they do have failings. As an example, arms companies often have quite healthy ESG ratings. And so when it comes to Palestine activism or supporting this effort, that would be concerning. And so to just sort of explain that that might be something to not find too comforting in and of itself, and to try to learn more. They remain important measures and have led to the change that positive change in the industry, but for this movement, they lack what we need. And so I've got some links there for some references that might be interesting to those using this report. So the untapped opportunity here is, we think, personal divestment for Palestine activism and personal pensions. So personal divestment is a thing in climate activism circles, and there is a lot out there for that. And so trying to build on that, but to target it towards supporting Palestine. And then personal pensions. So that's the single biggest pot of money we'll ever have, but do you know how it's invested? And pensions are confusing and, as I mentioned, can be really boring to try and figure out. So trying to do a little bit of an explainer here, but everyone's journey is totally unique here. And so this isn't going to cover everyone. So what about pensions? And we don't want to forget about investments. Direct investments matter, but pensions, because they're complicated, there's just a page here on pensions. So ultimately, most pensions have a company at the end of that pot that, multiple companies, often, in the hundreds possibly, and it's hard to find out who those are. But you can try and figure that out, and you can try to see if you're okay with it. There are restrictions on certain pensions, and if you're drawing down a pension, or it's converted to an annuity, there can be exceptions. And so I'm not pretending to be a financial expert here. So this isn't to say this is a one-stop shop for everyone. Every single person's situation is unique. But if you haven't started paying into a pension yet, great news, you're not supporting harm, but it's advisable that that is something to think about for later life. So take this as an opportunity to start on the good foot, which, I wish I had when I started paying into my pension. Resources here are key. So pension-wise, Money Helper. These are often government kind of linked places, and so trying to just share what the sort of central places you should reference before people like me and anyone off the street tells you what to do with your pension. Unbiased.co.uk is great to find financial advisors, such as the Path Financial, as we'll hear from later. And the next bit of the report is just giving a bit of a acronym to try and help remember that this is a process and that we want people to feel like they're acting even at the learn stage. So LED, trying to play on the expose the shadows light theme, right? So learn, ask, investigate, identify. Those are really critical. Questions do matter. When people have to answer questions, they have to investigate their own company and their own dealings. And so questions matter. Evaluate, be really careful, compare, calculate, request change from the inside. And then ultimately, if possible, divest, demand a change, move, and share what you've done with others. So that's the aim here. So the step, I've got a few pages for each step, and they're very high level, hoping to maybe build on it with the questions we get here and into the future. But roughly, step one is learning, investigating, empowering yourself to ask the right questions, improve your own knowledge. Key, find a financial advisor if you're unsure. That's what I did. And then here's some resources, a United Nations list of companies. So often the question is, I don't know what the list of companies is, and there's many, and there's a lot out there. So here's some links to a list of companies and also a way you can find company lists. Also, fossil-free investing guide. So this is something around climate change, but has some key points in it. So some resource, it's a smattering of resources. There's lots out there, and we hope to build on it. Step two, evaluate, be thorough, be thoughtful. This is your money. So it's really important that you act safely. And so we have, we're going to make sure that this overview gives links to try to point people in the right direction, but also we've got a speaker later that will hopefully lend some legitimacy to some of these things. So evaluate, be careful. And then divest, make a change. Any change is valuable. Seek advice again, reallocate investments, tell people what you're doing, track progress, and commit to keeping going. And some more resources, financial service register, check companies that you're dealing with, make sure that the person you're talking to is discoverable via that company website and that company and financial services register, for instance. And in summary, just pulling together some of the things in the report and then some quick reference links at the end. Again, the UN list of companies complicit in the illegal Israeli occupation. And then a few other resources here. These databases are quite useful. So if you do actually have a list of companies, which I'll go in a bit on my personal journey, how that can be difficult. But if you do have a list of companies, there are databases that you can go and search by company and see how those companies align with values, your ethical kind of preferences. And so that's the report. So I think I'll stop sharing here, and I was going to share my personal journey next. So I think we're going to try and keep questions to the end, but how do we want to do that, Belinda?
I think any questions, put them in the chat.
Yes, thank you.
Can I just say before Stephanie goes on to her personal journey that what you've just seen is an incredibly professional piece of work, and it's utterly original. Tonight's getting its first airing. This is what Stephanie's done, and I just am full of admiration. It looks so good. Thank you.
Thank you, Belinda. Thank you. That's really kind. So just quickly to share my personal journey, and I will go through this quickly because it's just to give flavor of no one's journey is the same, and I don't want to take up too much time. But I had an employee pension, so my pension the only pension I have is through the pension provider of the company I work for. And so before September 24, I had made occasional attempts to learn where my pension was invested, often stopping at the login page, but finding PDFs on the funds, finding top 10 holdings, fancy graphs, but really not getting to the heart of what I really needed to know. And so in September 24, I sent a request to move my pension away from Israel, the occupied territories, and US armed companies. The response was to check the PDFs I already checked. So the response was essentially go to the most obvious place on our website and do what you already did. And so that lack of transparency alone pushed me to start seeking ethical financial advice and try to move my pension to somewhere that not only aligned with my ethical outlook, but also just gave me more transparency and a bit more support on that because it is my money after all. January 25, company advice on transferring my pension was sought. So I had already started working with a financial advisor, but trying to get some details off my company, though well-intended, can be really patchy and misleading, and the people who you're talking to aren't pensions experts. And so finally, I found out that the third-party pension provider policy, so the policy of not my company, but the company that they employ to manage pensions, they actually did not allow a partial transfer. So transferring most of my pension out, but enabling me to keep contributing month on month and enabling the company contributions to also go in was not possible. It meant closing my pension for 1 up to 4 months, where I would miss my company contributions in particular, which is a real hit. And so we got a little bit of clarity on that with the help of my financial advisor, pushing back a little bit on that, and their compliance teams making sure that I knew that this was going to hit my pocket. I decided to move anyway. Not everyone would make the same decision, and everyone is different and has different levels of this. So this is not about what everyone should do. This is about what I did. In April, it was, this was March, and then April, the date I was advised to move it was already not possible, so it moved to May. May was then delayed due to a change of funds within my provider. So again, this stuff can get really boring, but essentially, even though I decided to move, March was turning into May, was turning into June. And so in May, I finally got some specific responses back, and you can see how many months had passed before I managed to do that. A real top tip is to specifically ask for companies. So I was asking in more general terms, occupied territories, the countries, etc. But even arms companies didn't get me anywhere, but I specifically gave them a list of companies. And then I received specific response of how much I was invested in, and 2% in BAE Systems, 2.5% in Rolls-Royce Holdings. I deleted this wrongly, but so that was obviously concerning to me and not possible to view on the PDFs I've been pointed to. And so I triggered divestment. I'd already triggered divestment months before, but I was really happy that I had done that. And so it's still not complete. It's happening now this month, but it is not complete. So I just keen to share that the journey does take a while. It did for me. Could be simple for you. But I feel empowered on what I've learned, and also to keep going in this journey. So that's my personal divestment journey. So I think we're gonna hear from Barclay next. Sorry, Belinda, you go ahead.
No, Barclay, over to you and your personal journey.
Thank you, Belinda. Can I firstly say that what Belinda was saying earlier on, just to echo what she was saying, Steph's presentation, if you like, program there, is her overview is superb. Please do download it. It tells you an awful lot of stuff, and it's very professionally produced. It's very useful indeed. She's helped me enormously. She's taken the lead by far. Of course, I've followed on her coattails, really, I suppose you could say. I just want to share a document now, if I can. Oh, blimey heck, there we go. See if that works. Are people seeing that?
Not yet.
Okay. Can't make
Yeah,
this. Oh,
something's
there we go. Got it. Good. Okay. I just clicked on it, loads, and something happened. Okay. So for me, the rationale for disinvesting is quite clear. If we're going to do anything about the situation in the Middle East and Palestine, then we've got to hit Israel from every single angle we possibly can. And therefore, money is one of the most important ones. And of course, BDS, as I've said here, isn't restricted to food on the supermarket shelves. In my case, it's different to Steph's. I'm 70, therefore I'm in, well, maybe not therefore, but anyway, I am retired. And everything that follows from that, I have a pension, which I don't use, therefore it's still gathering growth. And it's that I was thinking of using to disinvest. And the way to do that, as I discovered, was by a way of a self-invested personal pension, a SIP. Now, SIP's pretty much what it says on a tin, really. As I said here, you're free to manage all your investments yourself. It's useful because it is everything that you can do for yourself, but it's a lot more work unless you have somebody managing it for you. If you do, they're likely to have to charge you, of course. You have to be careful about that. But if you want to go into a self-invested personal pension whilst you're still earning, that is, not like myself, whilst you're still in regular employment, so to speak, or self-employment, as likely as not, then you can place fairly substantial sums into a SIP. All that's great. Sounds fantastic, doesn't it? So the pension provider does all these sorts of wonderful things for you there. You do have to be careful. There are caveats to this. Be careful about fees and charges. Maybe mention something about that a little bit later on. But I would turn around and say that something fairly, I'd almost say dramatic, happened whilst I was doing my research. And this really emphasizes the point that you have to know your advisors. You have to trust them. Because the advisor that I was initially speaking to before I did my own research didn't tell me what I'm about to tell you. And it is fundamental, and for me, unfortunately, it's a deal breaker. It means that in my case, I can't use SIPs. You may yourself be able to use a SIP. The point is, be very, very careful, please. So as I've said here, what happens to my SIP when I die? Most of the time when you die, your SIP would be inherited tax-free by your nominated beneficiaries. If you die before 75, your beneficiaries will get it as a tax-free lump sum. Great, lovely, sounds great, doesn't it? Everything's hunky-dory so far. Watch out for the next bit. If you die after you're 75, things work a little differently. Your beneficiaries will be given 3 options on how they can take the money. Each one of those 3 options comes with a tax implication, where they could be taxed on the sum that they take from the pension at their current income tax rate. That for me was a deal breaker. That meant that I couldn't use SIPs. Okay, so what to do about it? Well, the best way that I can perhaps talk about this is to say 2 things. Firstly, that I'm in the process of pressuring my present pension company provider, if you like, to action so funds that divest by nature of the fund itself from arms production from countries that are breaking law and so on and so forth. So that's one option. The other option, however, is quite a nice one, quite a neat one. Not only do I have pensions, but I also have investments. My investments, as it happens, it's very personal, but a lot of people will follow exactly the same course as me, of course, is I have ISAs. And ISAs, when I die, are treated in exactly the same way as any other assets are treated when people die. So that then makes that an option. So this route isn't close to me. I can still go out there and find an IFA or a provider who will invest my assets in the way that I want them and I tell them to invest them, which is great. Okay, so key points, perhaps I think is the first one to my mind. I used to be an accountant many years ago, 30 years ago maybe. So I speak the same sort of language as people in the financial industry are concerned. So the first one there is, to my mind, the most important one of the lot. Trust your financial advisor. In many ways, to be honest with you, that is more important than the return you get on your investments. Because if you can trust your financial advisor, the return on your financial investments will follow. So know your provider, know the tax law. If I hadn't done my research, I might have fallen a cropper there. Know the costs. Now, here's the thing. You could have an advisor and you could have a provider, and you could be paying charges to both. Be careful about that. Be careful of costs. Yes, check performance. Be careful also. I'm just going back to costs for a second. If you decide to take your pension pot from one source and put it into another source, there may be some exit fees there as well. Be careful about that. There is free advice from various services. They're listed in, many of them are listed in Steph's work earlier on. So that's really helpful indeed, very helpful. And last of all, do research, do research, do research. As Steph said earlier, everybody's unique and everybody's situations are different. I'll just finish off quickly by saying investments do go down as well as up. The axiom is no different when you choose your own investments. Be aware that in a time like this, it's probably true that the stocks of, I haven't checked it out, but I would imagine it's true that the stocks of arms manufacturers are doing really well. So you may not be doing as well as if you invested generally in a normal way, but that is your choice. What do you want to do with your money ethically? What does your conscience say to you? Okay, that's me. I'm continuing. I will be moving my ISAs across, and I should be doing so with a big smile on my face.
Thanks very much, Barclay. Before I move to Shams, Steph, there is a question in the chat. It's probably useful if you deal with that now. It is about what happened. I remember you were saying the pension provider was saying you'd have to sort of move out of the pension fund and lose contributions for a few months. So one of the question was, what happened next? Did you maybe you've answered that. Blah blah blah. Yeah, I think you've been answering that while I've been.
I answered it in the chat, but
Yeah.
I'll just
Just summarize it. Yeah.
So I will have to go without my company's contributions for at least a month. And then I'll hopefully be able to reopen my pension in August, missing only 1 month, but I was informed that due to the process, it could take longer. So it's a risk. It could be longer. But an additional point is, with my financial advisor, I was able to learn that that was unusual for the industry. So the advice I was getting was, of course, you have to close your pension for a month, and of course, you have to do a full transfer. And so I was able to actually get the sort of ecosystem of that and say, that's unusual, so you should push back on that. And so I did. And ultimately, unsuccessfully, but we did get some clarity and something written in email. So, I plan to keep going with that. I feel armed now with that understanding and being able to push back on that. So just information has helped me feel more confident asking questions and pushing my own company and their provider.
Okay, we've heard a lot about the importance of financial advisors and how they can be really helpful. So we're delighted now that we're going to have a financial advisor, Shams, who happened to be the financial advisor to Stephanie, who's going to tell us what happens behind the curtain, if I can put it that way.
Absolutely. Good evening, everyone, and thank you very much for inviting me today, especially Steph, and thank you very much for the lovely introduction, Belinda. This evening, I just wanted to do a whistle-stop tour of how to make the rubber hit the road, as it were, in terms of getting to the point where you divest and essentially can invest according to your values. So I will share a presentation on a screen very shortly, but I don't want to be beholden to that. But there are some nice introductory comments we can make as to how to go about making your personal divestment journey. A couple of caveats. None of this is financial advice per se. It's more generalities about the way to go about thinking about divestment. Financial advice by its very nature is really personal to each and every person. So please do your own research. Please do engage in with providers and IFAs and the like to take it forward. Please just take this as guidance for the time being. Yeah. So let me just share my screen and we can take it from there. Can everyone see that on screen there?
Okay, yeah, it's can, yeah.
Yeah, perfect. So a bit about us, and although us as a company, and I don't want us to be the focus at all in today's conversation. Today is about your journey and how to go about divesting, but a small bit about us. I'm representing Path Financial. I'm a chartered financial planner here. We are believed to be the first financial advisors set up from the ground up to help address the climate crisis. Yeah, so our focus has traditionally been on climate and climate change and the planet side of the people and planet equation, but the very nature of the way values-based investing and ethical investing works is there's a massive overlap in how we go about investing. Clearly, the forum here has a particular focus on arms and such like. So naturally, we'll go on to that and how we can avoid investing in things that do any harm. But that's us in a nutshell. So we started with an absolute blank piece of paper and started with a sort of a climate ethical focus in mind and took it from there. Yeah. Two main sentiments that I wish to get across to everyone today. One is just building on what both Steph and Barclay said, is the power of your own agency in helping to create change in the world. Well, we all know that from the various movements one might be a part of, BDS and the like, but the power of agency in knowing where your pension or your investment is, with the provider it's with, the investment manager and all of that, that can really lead to creating change in the world. And the other point I want people to go away with is, please don't let perfection get in the way of progress. Yeah, we as humans are quite binary in nature, and sometimes we need to move the conversation forward somehow rather than try and aim for perfection. And we're always clear in the fact in what we can and cannot achieve when we speak with clients. So there is a lot of power in being able to move the conversation a lot further than it is currently. Yeah. Fine. So a bit about ethical investment, and there are various terms bandied about in terms of ethical investment, ESG investment, values-based investment. So it's good to just put it in perspective, really. And what you can see here is what we call, so on the right-hand side of the screen, is the spectrum of capital. Yeah. So on the left-hand side of the screen, you have traditional investing. So traditional investing is tooth and nail capitalism that puts profits and returns above anything and everything else. Yeah. When you move to the right-hand side of the screen, you come to gradually more values-based and ethical investments, yeah, all the way to impact investing. Beyond impact investing, there's philanthropy, right? Philanthropy is investing in a manner of speaking, but without any financial objective at the end of it. Yeah, so we have a wide spectrum of capital, all the way from traditional tooth and nail capitalism that just wants to make profit, all the way to impact investing and philanthropy. Impact investing, or positive impact, or ethical investing, is basically looking at how can we have our cake and eat it too, right? How can we invest according to our own values, whether that be climate focused or people focused, but still make a return in the long run? Yeah, because we still want your pensions, your investments to do what they need to in the longer term. So that's generally the spectrum of capital. And what we've noticed is people are slowly shifting towards that ESG side of that spectrum of capital. There's regulatory pressures. FCA has introduced new rules around greenwashing and the way funds are labeled, but there's also personal pressure. People like Steph and Barclay who've divested themselves, and that movement is continuing. I also just wanted to echo something that Steph touched on in her presentation earlier, which was, again, I echo what everyone else says. It was really professionally done, and it's a lovely document to refer back to. ESG is a term that's bandied about in many circles, not least investing. ESG, environmental, social governance. And much like Steph said, we as a company feel that ESG is a very low bar by which to judge an investment. Yeah. There tends to be a greater focus on the G side of the equation. So governance takes precedent rather than environmental and social factors. So for example, just to color in an example or a couple of examples, there's a agency called MSCI who does ratings, and they have an ESG calculator. And if you go in and you put in a company such as BP or Shell, yeah, they tend to come out quite well in ESG ratings, right? The reason being, they are fundamentally well-run companies. Yeah, so there's a lot of weight on the G side of the equation, but it completely ignores the environmental and social factors. The fact that they're pumping oil out of the ground is probably a major concern for those with environmental concerns, but that simply doesn't reflect in the data. Yeah, so ESG is a low bar, so there needs to be more digging underneath the surface to understand what you're actually investing in. Yeah. Perfect. So where do we start? So for a long period of time, we didn't have agency over our investments or pensions. Pension freedoms came in about 2015, 2016. So people had a lot more freedom to invest according to their values, especially into retirement. Yeah, and you weren't just compelled to go with one approach when you hit to retirement. So people are investing for longer and longer. However, people have traditionally had their heads buried in the sand as to what they're investing in. But there's two sides of the equation here. There's one side that says that they didn't know that there was choice, but the other side being providers weren't offering the choice. And that latter problem is slowly going away, albeit at a glacially slow pace. Workplace pensions, pension providers, and the like, they are starting to understand that pension members and clients want to invest according to their values. But there is A, difficulty in finding the relevant managers that can take on that mandate, and B, there are structural factors from the FCA, for example, that say that allocations need to be X, Y, and Z. There's also the fact that some pensions, defined contribution pensions, for example, defined benefit pensions, I beg your pardon, or public sector pensions, their mandates cannot change. Yeah, but there is movement. Yeah, there is movement. Where do you start when you want to look at investing ethically? We hope that most people agree that there are definite red lines that people don't want their money to be invested in. For the forum here, and I don't think it would be daft of me to say for 99% of the world or more, arms is probably the biggest red line that one would have, right? Steph mentioned BAE Systems, Rolls-Royce. That's completely needs to be avoided in any ethical approach. And that's what we do. And that's what generally all ethical and impactful investment managers do. There are also other criteria that we think are quite obvious in terms of sectors, industries, and controversies that one would want to avoid. And some of them are listed there. But the conversation moves beyond that. So traditionally, ethical investing was simply avoiding harm, right? So a lot of people are happy with a do no harm approach, and that's absolutely fine. But there's also an opportunity on the back of that to say, well, we're doing no harm, but can we actually promote good? Yeah. And that's where something like a positive impact philosophy might come in. We look at that as ethical plus. So looking at strategies and companies that can really help people and planet move forward. So let's contextualize pensions in the UK specifically. So the figure is huge, £3 trillion in pensions in the UK. That's a lot of money. There's a lot of money in companies that are probably not aligned to the vast majority of people's values and ethics. Yeah. So, for example, 300 billion of that 3 trillion is invested in companies linked to deforestation. Yeah. But it's not immediately obvious when just looking at top 10 holdings or top 20 holdings of a pension fund. Yeah. And what we also find is many people whose day job might be as a medic, or they're very active in the climate space or something like that, their own pensions and investments are directly in contradiction to those values, which happens. We're all human, it happens, and sometimes we're forced into that because of the way that our workplace pensions are invested. Yeah, it happens. But the main point here is there is choice. There is choice. You're not tied in to to that provider or that philosophy forevermore. You will always have some form of choice. Yeah. So speaking a bit more about climate change, and I appreciate the forum here is probably more on the people side of the equation when we talk about people and planet. We are planet focused, so our data is slightly more relevant to planet. So we can show you that the average UK pension pot is about £35,000, and we reckon that that in and of itself can produce somewhere between 6 to 10 tons of carbon emissions each year. Yeah. By shifting that to a portfolio that has a lower exposure to carbon intensity, companies can really reduce reduce the overall positive carbon impact of a portfolio. We've got data to suggest that moving money away from a FTSE 100 based portfolio to a more ethical portfolio can reduce carbon emissions by something like 70 to 80%. So a real material change. Yeah. And then there's also looking at what do we use, and what could you as an investor, as a saver, what can you use as a framework for investing your money? Yeah. And more often than not, there's a global framework that investment managers rely on as their North Star to qualitatively expose their pensions or investments to. And those are the UN Sustainable Development Goals. I'm sure everyone will have come across the UN Sustainable Development Goals in some shape or form, but essentially 17 goals that the world has come together to say that these are the main problems and this is what we need to do to solve them. And there are people-based problems, there are planet-based problems. Yeah. And what we have to do, and what investment managers in general have to do, is use the Sustainable Development Goals as a framework by which to qualitatively invest your money. So there's not, what I'm saying here is we also need to make sure there's some science behind how the money is invested. Yeah. So in looking at returns, in looking at portfolio performance in the long run, there needs to be a framework by which money is invested. Yeah. So I'll just move on ever so slightly to real world impact of money. And one such example is here on screen, which I hope everyone can read. And this is a really good way of understanding how an ethical portfolio can be used to A, avoid harm, and B, solve a problem. Yeah. So what you're looking at here is social bonds. Yeah. A bond is essentially a loan to a company for them to do what they need to do, and you get an interest rate back. That's a simple elevator pitch for a bond. In traditional portfolios, bonds are more focused on big corporates or governments. Yeah. The US government bonds are one of the largest components of most pension funds or lower risk pension funds. By extension, we also know that the US government bonds directly or indirectly fund a lot of the Israeli military and the defense and military spending arenas. So in traditional portfolios, there's an indirect or direct exposure to Israel, yeah, through government bonds. By avoiding that, you avoid the harm, naturally, of what that can lead to, but you also have the ability to invest in something that actually does good in the world. So I hope everyone's had a chance to read that. This is just one example of how we can mimic what traditional portfolios might need, and what you can instead invest in to actually create change in the world, right? How to give people, those who are homeless or having difficulties, give them an opportunity to build themselves back up. One final example from me, and this is a passion project of mine. So I haven't spoken much about myself. So I'll give you the very quick rundown of me, so you know who's speaking to you. My background is in international development. I did an economics degree. I then did a master's degree in emerging economies and international development, and I worked in international development thereafter. I tried to start a project in Mozambique and Angola to bring solar energy to rural and off-grid households. So making sure that people who were traditionally reliant on biogas, biofuel to heat their homes, to charge their phones, things like that, they could switch and get solar energy and effectively get free energy over the long term. Worked on that project for about 3 years, but unfortunately funding didn't come our way, and I pivoted and joined the real world and joined financial services, and hence came here. But my focus, in addition to solar energy, was very much on microfinance. And I don't know if many people have come across microfinance, but my origin is Bangladeshi. My family's from Bangladesh, and microfinance is a tool that's been used in Bangladesh since the 1970s for poverty alleviation. The concept is that you give small pockets of loans, really small loans. We're talking $2 or $3 or $4 to those who are traditionally thought of as unbankable. Yeah. In Bangladeshi society, that has been women traditionally. Women, as well as women, and in addition to that, those who have no collateral, right? Here, to borrow money from Barclays, you need to put your house on the line, right? A lot of people don't have an asset to put on the line. So in lieu of that, there's something called social collateral. So you look at how other people can keep you in check. Yeah. And essentially, if you are able to give small pockets of loans to these women in rural areas, they're able to use that money to invest in themselves. It could be as simple as buying some chickens, buying a goat, buying a sewing machine, and I don't know, selling the eggs, selling the milk, etc., 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 to help them build themselves out of poverty. And that's what I've done a lot of research on, what I've done field work on, and I'm really proud of what that can achieve in the world. But that needs money from somewhere. There needs to be some big pot of money that leads there. And that's where retail and institutional investments come in, right? It can't just be a big World Bank type project. Your money could go towards funding this type of social inclusion and social development. Yeah. So there is a lot of power in your own money, not just from the point of view of avoiding harm, right? That's fantastic in and of itself. If that's all that you can do, that's still a fantastic start. But there is also somewhere where you can invest where it turns the equation on its head and says, ooh, we're actually doing positive good in the world. And that's not just charity, that's social business. Yeah. And that's where microfinance, social housing, things like that comes in. Yeah. So I just want to leave everyone with this. And as I mentioned, our focus has traditionally been on climate. Yeah. The main speaker in our space is David Attenborough, and he has also focused on the power of pensions. He's also been an advocate for something like the Make My Money Matter campaign, which talks about personal divestment, personal agency, and all of the above. So he's someone who we take great inspiration from. And we see that his work on the climate crisis can be used to influence and excite us to do social good, right? It's very difficult to invest in social good as it currently stands. I've probably told you the best two examples that I know, social housing and microfinance. But the investability of the social good is slightly more difficult than the planet side of the equation, but we're getting there slowly but surely. Yeah. So that's me done for today. One final stat or one final tidbit to leave everyone with, just to reiterate the power of personal agency. The People's Pension is one of the biggest workplace pension providers in the United Kingdom. Yeah, a lot of people have their pensions. They're quite a cheap provider, and they have a relatively okay investment range. They have recently moved a £28 billion mandate away from State Street Bank. The reason? There was, to quote unquote, and I need to get it correct, it was because the stewardship mentality was not quite where the People's Pension wanted it to be. And what happened was they moved the £24 billion mandate away from State Street. The US fund managers, US investment managers are increasingly being put under pressure from the quote unquote anti-woke population. So they have a different philosophy on social inclusion, ESG, and the like. What the People's Pension did was simply move that mandate, right? And £24 billion is not a small chunk of change. Yeah. So I hope that's been very useful as a whistle-stop tour of personal divestment and what you can do to actually help the rubber hit the road. Happy to answer any questions that you may have. You have my email address there as well in case you wanted to contact me directly. But yeah, thank you very much for having me.
Thank you very much, Shams. And I particularly liked the way you made that distinction, the sort of the continuum from, well, traditional capitalist investment, then the doing no harm bit, but to impact investing. And, if we can at least do no harm, that's great. But if we can, actually invest in impact. There was someone in this group, if he's still here, who I think may want to say something about international development in Bangladesh. I don't know if Keith is still on the call, but he has a lot of experience in that. Yes, you are, Keith, in case you want to come in on that. I'm also, I mean, there aren't any questions in yet, and we're trying to stick to personal pensions, but we've been trying to lobby our county council about their pension fund, or they're part of a big pension fund. And some of us went along to a pension fund committee. And I realised that the council officers are what they know, they're good, but they don't have all the advice. So there's a lot of other advisors around. And a question we kept wondering was, is anybody telling the advisors or the county councils that the ICJ last year said that it gave an advisory opinion on the legality of investing in settlements, Israeli settlements? And you would have thought that someone somewhere is saying to the county councils or to their advisors or somebody, this is very risky. And I just never could quite get to the bottom of how that information, it's in a UN document. Clearly, there's running risk. There might be cases, and they should be advising their clients. But that doesn't seem to filter down, or does it? I mean, I don't know how the knowledge gets shared among the advice industry.
It's interesting, Belinda, because there is a very big disconnect between what you can achieve as an individual versus what change you could elicit with these big public sector pension schemes, for example. So certainly on the personal side of things, it's much easier to vote with your feet, right? When there is a big corporate involved or a local council, they've got many different types of risks that they need to manage. And they put that mandate normally in the hand of someone like a Straight Street that I just mentioned. Yeah. And so they are probably one or two steps away from the actual decision-making process, which doesn't make it right, absolutely. But that's just the way things have played out, that they let the investment managers do what they need to do. And fundamentally, for the public sector schemes or schemes like that, they're probably on the left side of that spectrum of
I
capital.
understand that. It's just how is it even on the radar of anybody that there's been a UN advisory opinion concerning businesses operating in the settlements, and it's basically saying it's the responsibility of all UN member states to stop that. Is it not even on the radar, risky thing?
No, but truthfully, no, not as
Oh,
explicit as that,
yeah.
Belinda. No.
Okay, right. There aren't any questions in the chat, but do put your hands up if you'd like to capture my attention, either electronically or just wave a hand. John Kelly.
I was a bit surprised by the difficulties that Steph described in switching her pension, because I'd understood that once it became compulsory for employers to contribute to pensions, that the law had said that if somebody chose to set up their own SIP, for instance, that they could tell their employer that they wanted the employer's contribution to be paid into their own SIP. That's what I've always understood.
Unfortunately not. It's not. So whenever we speak with clients in a similar situation, we always ask employers whether they would be willing to contribute to a SIP on behalf of the member instead. But they are under no compulsion to do so, right?
Okay.
They will cite administrative ease for sticking with their corporate pension scheme, right? There is a lot of admin that goes into the payroll side of things and actually making those pension contributions, and simply they don't have the bandwidth to be able to do that. But we always still do ask the questions, and depending on the size of the company, they may say yes. But unfortunately, no, it's not a case that you can compel your employer to pay into the provider of your choosing.
Steph.
Yeah, I wondered about, because in trying to research this, I was trying to get a handle on how does the industry avoid criminally complicit companies. And so in the opinion of many on this call and watching this would be that includes those companies on that UN list. But if we zoom out a little bit, a criminally complicit, say, I don't know, illegal drugs, how is the industry controlled when it comes to criminality of companies at the end of these investment firms? And if there were a criminally complicit company, what's the process for raising that, should one find that out?
Good question. So the way we would approach that is via the relationships we have with the investment managers and the fund managers, right? To prompt the divestment of those companies. There are still teams that do that day in, day out to look at that the companies and make sure that a company that was invested on day one, which seemed tickety-boo, is still the same company on day 5 or day 6. But we as advisors and particularly at Path, we have a really vociferous client base who will leave no stone unturned if they do find this. And we encourage that feedback. And that's the only way we feel that that engagement can continue, right? There will always be certain black holes in terms of the research capability of organizations. So we really encourage people to engage with what they're investing in and move forward. We've had examples where our clients' feedback has led to companies being divested from, right? So companies that were probably once good have now been divested of. On the criminality front, I can't speak to that specifically, Steph, but it's just a case of raising the concerns, and if we can bring forward the UN report and things like that, that if it goes underneath the eyes of the fund managers, that's something, because there's not going to be a big swathe of people who do that, and if we can start getting that conversation going with those fund managers and investment managers, that's a start. So we think voice is a big thing, right? Voice of our clients and a collective voice to highlight these issues. And to use you as an example, if you don't mind, Steph, you were particularly concerned with the occupation of Gaza, naturally. And I think when we were able to show to you that we've at least had those conversations with the investment managers, that it's not just a background, it's not just it's not a concern that's somewhere in the background. We've engaged with our investment managers and fund managers on those particular topics, and exposure to certain countries and sectors and things like that. That just makes the means that the conversation gets going, really, more so than anything. It's the sort of the perfection versus progress mentality. As much as I don't like boiling it down to that, it's sort of just being able to move that conversation forward.
Right.
So it seems there's no
Nothing systematic, is there? It's a bit haphazard.
systematic for even just general criminality, even if we're taking that line. It seems it is more of a collective ecosystem of checks and balances.
It is, but beyond that, also just for the forum, there is, you're quite right. There's no structured approach of doing so, but as time goes on, we are finding more and more organizations. So, for example, Share Action. I don't know if anyone's familiar with Share Action. Share Action's main modus operandi is to have access to company management at the AGMs via buying shares. And that's something, right? And what we find is no one really turns up to these AGMs. So you might have the CEO of a big company all to yourself at an AGM if you were to attend. That in and of itself starts a conversation, right? And we've had both staff and clients go to some of these AGMs. It's a very recent development, but it's still helping to move that conversation forward.
Other questions or comments? Parkley, and then Dave.
just unmuting myself. Yeah, I mentioned earlier on the idea of trying to persuade insurance companies to invest ethically on a wider basis. So some of them are doing various things about the environment and so on. Very few that I've seen are doing very much about international law, arms manufacturing, and industry generally. What would you think are the best ways of influencing insurance companies, both on a personal basis and on a group basis, please?
That's a really good question, Barclay. And my short answer is I don't know. And the reason is insurance companies are such big beasts that they are difficult to tame. And we as financial planners, we are sometimes caught between a rock and a hard place in terms of our fiduciary duty to you as a client to do what will be best for you, but also with our ethics hat on. Yeah. So a discussion that we have with many people, especially those who approach us, is that if you were to give your money over to an insurance company, and for pensions, that means an annuity. Yeah. So you build up a pot of money and you give it over to an insurer such as Aviva, Royal London, Legal and General, and they promise to pay you an income for the rest of your life, right? Like a traditional pension. But you have no more control over that money. For some people, that's a complete red line. For others, it's a sort of a means to an end, if I can put it that way. It works for their situation, but they're still not happy with the loss of control, but they might be able to do something else with the freedom that they get from receiving that pension. Yeah. So it's a conversation that's high on our mind. We have yet to find an ethical insurer, all right? And believe me, we've tried. Again, with the hat of progress, not perfection, Ethical Consumer has some rankings of insurers. So, for example, and this may be a bit out of date, but Aviva, for example, tends to come up a bit higher than the other insurers in terms of ethics and values and things like that. That might be a low bar, but still, it's higher on the list. So, in short, Barclay, I don't know. I would say normally it's voting with your feet and moving elsewhere, but insurance is such a beast that you have no other alternative sometimes. If you get to the age of retirement and and the best thing for you is to get an annuity with your pension, what do? Can you go elsewhere? Can you afford to be in drawdown and remain invested and take the risks of that, or would you rather be guaranteed an income? So it's really difficult. It's really difficult, and I appreciate that's a vague answer, but no one's really sort of cracked the code on how to sort of make insurers do better with their money.
Thanks for raising that aspect, Barclay. Dave Sternberg.
This is a bit incoherent, my question. Very interesting discussion and lots to think about. And in terms of personal action as well, I mean, in terms of my retirement, I do have we have a financial advisor because my partner's still putting money into pensions whilst I'm taking money out, if you like. But I'm very interested in this sort of raised by Barclay in the last conversation, and what Belinda was saying originally about trying to find things out. The public sector pension funds are huge, I gather, and I seem to remember having worked mainly in the voluntary sector and local government sector, that our trade union representatives were sometimes involved with trustees of the public sector funds where we were paying our money. And I'm now beginning to wonder what kind of power those trustees have. Are they local councillors in the case of local authorities? Are they trustees of charities in terms of the maybe the not-for-profit sector? And what kind of leverage ordinary people who've been paying money into the pension funds have? Because we've all read about the scandals in the private sector where pension funds have become the personal property virtually of the owners of company like Maxwell. They're able to move money around. And there does seem to be some power that lies with whatever the trustees or the people that run a public sector fund. Some might laugh at this democratic control. And I just wonder what we as either trade unionists or employees or even pensioners how we can influence those people to make better decisions about investment.
Thank you for your question, Dave. So, interesting one, and we've had experience of many people who have similar concerns. So, for example, those with an NHS pension, for argument's sake, or a local government pension, or a police pension, or a firefighter's pension. Those are what we call defined benefit pension. So just a very quick overview. Defined benefit pension is where you've worked for an employer for quite a long time, you finish up your stint there, retire, and they guarantee to pay you an income for the rest of your life, and it increases by inflation and things like that. Those are big liabilities for those organizations or corporates, so they are fallen out of favor by and large in the private sector. I can't think of any private sector defined benefit schemes that exist anymore, but they are very prominent in the public sector. So the way to influence change, Dave, is the same thing that I would say is sort of, you can't vote with your feet, right? Because you're tied into the pension scheme, right? You can't do that. The best thing is lobbying, and we've found that the university scheme, for example, I don't know if you've been across that, the university scheme has been very active, and the teachers and the professors in the university scheme have been very active in voicing their concerns and seeing if the university's superannuation scheme will change the way their investments are made. I don't know off the top of my head how successful that's been, but that voice has been growing over at least 5 years since I've been working in this space. So my perspective on that, Dave, again, it's a bit airy-fairy, but it's the lobbying and the voice from the members to really articulate that they are not happy with exposure to US government bonds, for argument's sake, as an example, because of the follow-on repercussions. That in and of itself can put a lot of weight on those schemes to change the way they behave. And fundamentally, if the younger members aren't happy with where the money is being invested, they can opt out. They're not compelled to be in a pension scheme. They can opt out, and that will challenge the funding capability of those public sector or defined benefit pension schemes. So there might be a way of putting pressure on, albeit that is an extreme way of doing so, and pension contributions are fantastic. But if the aim is to create change, that is one way of doing so.
I could just chip in on the county council. I'll come to John in a moment. Dave, sorry, I've got a dodgy voice. We did, if you rummage on the county council website, you'll find the mandate of the pension fund subcommittee, which also links into the staff committee. Now, there are 5 councillors or county councillors on the pension fund subcommittee. The chair hasn't changed, but some of the other members have. Sarah Miller, for example, was on. And we submitted a document to them in which we focused on the investments. Well, we focused on settlements, using the argument, A, the government's own advice to businesses is not to invest in the settlements because they're unstable and illegal. Secondly, there's the UN, the ICJ opinion. And thirdly, the UN database, which Steph had mentioned. We also gave them a document from Palestine Solidarity Campaign, which they'd looked at all the county councils to see where their pension fund were invested. I mean, Warwickshire County is part of a bigger pension fund. It was quite interesting. So we handed this all over. And I mean, I don't think we were expecting a great revolution. There's even less like it now with the change of power. But it was interesting just to sort of try to raise the issue about, do you think it's a good investment? Part of the morality of it, are you sure about this? And this was the bit where I sort of felt, do these pension, because there's the councillors who know what they know, but then they've got perfectly decent professional advisors, the folk who know all this stuff sitting there, who probably wouldn't know an ICJ opinion if it, hit them on the head. But I think it's still worth rummaging on that. And I think there's a new committee, and it's worth us seeing how they're getting on. It's a bit chipping away. Now, like you, Dave, I'm probably old enough to remember going on trade union training schemes for pension trustees. and most of us would run a mile from taking up the role. But I honestly don't know to what extent how powerful that is now, given that trade unions aren't as powerful as they were. Anyway, over to John.
A lot of this discussion this evening has been about large organisations and their pension schemes. But am I not right in thinking that over half the people in this country are employed by small and medium-sized firms? So what are their situations likely to be? What sort of pension schemes are they in general going to be in? And is there a different way of influencing things than that?
Absolutely, that your very astute observation. So yes, the majority of people will be in smaller pension schemes, or the number of members will be smaller. More than likely, they will still be administered by one of the big giants of workplace pensions. So Aviva, for example, is one of the biggest workplace pension providers, Legal & General. I've mentioned the People's Pension, they're quite a good one. Nest as well, that's the one that the government almost set up after the sort of the auto-enrollment minimums came in. So they will have pension schemes with one of those big providers, mostly. There are some other providers that have come across my desk. The tragic irony, I suppose, is sometimes those smaller pension schemes have a lot more choice in what they invest in. So I can speak to the Aviva one, for example, and that's when we look at advising corporate clients on setting up their workplace pension scheme, Aviva generally comes out on top of the list. Yeah, they're not necessarily the cheapest. Price is what you pay, value is what you get. But they're not necessarily the cheapest, but they give you the widest range of quote unquote ethical and sustainable funds to choose from. Yeah, whereas one of the other providers, say Nest or People's Pension, they might have one quote ethical fund for you to choose from. So that's still much better than the traditional fund you might have, but there's more choice in an Aviva or a Legal & General. So hopefully that answers your question, John. In terms of the small and medium sized companies, they are probably in a better position as long as they're willing to look beyond just the high level, just the cost on the door, basically. If you want just cost on the door, there's going to be the cheapest chips pension fund that will do what it needs to do. Yeah. If you look slightly beyond that, and even not even much more expensive, it opens up the world of choice for an employer or an employee.
Yeah, can I just come back on that? I said companies, of course, at the beginning, but actually, what I should have said was employers, because there are an awful lot of charities.
Absolutely.
You know, hundreds of thousands of them actually. It's hard. How many are actually employing people? I don't know, but I mean, there are a whole lot of charities in this country. Mm-hmm.
Okay, Barclay's asked for the floor, but is there anyone else who hasn't spoken who'd like to? Because we'll be wrapping up quite soon. Wave at me or raise a virtual hand if you'd like. No, is anybody struggling to raise a hand? No, okay. Barclay.
Yeah, thank you. Yeah, thank you. I was self-employed and I had a pension scheme in which I was the only member. So speaking to John's point just there, yeah, it's quite convenient. The thing I was going to say though substantively was that we've been talking almost exclusively about pensions today. Don't forget, you may well have other investments and you can do an awful lot with them. And very often you have more flexibility in what you do with them than you do on the pension scheme. Would you agree, Shams? Yes, would that be a fair comment?
Absolutely. There is flexibility in what you do, and you can sort of, with direct investments, you can do with pensions generally, you have to invest in publicly traded companies. Yeah, in general, they need to be listed on a stock exchange and be tradable day in, day out. Right. In general, there are more esoteric pensions out there where you can do a bit more, but in general, direct investments, you can do a lot more boots on the ground impact, I suppose. And there are companies that allow you to do that.
Yeah, so I mean, certainly we've talked a lot about pensions, but the focus always was, to an extent, the money on which you have a greater degree of control than, for example, if you're in a company pension scheme. So it's pension pots for people who are moving between jobs. In Stephanie's case, she's actually able to get some control over the pension scheme and still have the company contributions. For others of us, it's savings, which some of us, we're partly putting into investments with financial advisors. And it's getting the knowledge of what are the questions we need to put to them. Because I imagine anyone here who has any personal investments, well, obviously, they're probably the sort of people we are. The financial advisor will take one look at us and say, well, you obviously want the ethical stuff, don't you? Because we're hardly going to say, no, please, I want tobacco and alcohol and drugs and rock and roll and what have you. But it's pushing beyond, and that's why I like this impact investing sort of concept. And I think all the tools, all the links that Steph's been giving in her list of resources is very, very useful. The UN database, I mean, it's not very long and it's been very controversial, but it's just interesting to see the sort of companies that are there. Booking.com and Airbnb. I'm getting ready to draw to a close, but I don't want to prevent anybody who wants to say anything, ask a question from doing so. Can't see any hands. Steph, as the creator of the idea for this, which is today is the start, I hope, of further work on this, is there anything you'd like to say as a closing remark?
Yeah, sure. I think I'd like to say that it's a continuing journey. I have not achieved exactly what I wanted to achieve, and I will still have to contribute within a system that I think is not where it needs to be. And so I'm actually excited to pressure that from the inside. So because I'm not able to fully divest, I have an opportunity. So I like to see it that way as well. And so I hope others can share their journeys. And what I've also asked is if anyone is interested in building on this. I think there's a lot of things we can build on this. For instance, email templates to send to people, flow charts to help people out. These are things I have not gotten to. And so if there's anyone out there who feels passionate about this too and wants to contribute, I'd be really interested in getting their help. Thank you.
Thanks, Steph. And I think it's been useful to have this event for the people who are here, but also I think for many of us to talk to younger relatives who are perhaps at an earlier stage of their career and in dealing with pensions, or people who are about to, retire and have some lump sum in which they're investing. So I hope we can share the knowledge so it doesn't just stay within this group. Thank you very much for joining this, and particular thanks to Shams for coming along, and thank you to Steph and Barclay for sharing your personal experience. Just for those of you who follow what JFP is doing, our vigil this Saturday will be in Kenilworth. The following Saturday will be in Leamington on the 5th of July, and we'll follow it up with a demonstration outside Barclays, another part of divestment approach. And on the 10th of July, we have a film screening of the documentary, I always forget the name, but the one the BBC showed and then took off iPlayer. And on the 17th of July, we have a Zoom meeting with a former ecumenical accompanier who spent 3 months in Bethlehem at the turn of the year, and she'll be talking about her experience there, and we're organising that jointly with Warwick Quakers. Thanks very much for coming and have a good evening. Bye-bye.
Thank you.